want to welcome everybody to the training day with F&G, and we have Tom. I don't want to botch your last name, Tom, so we're going to let you give that. But Tom is with one of the leaders with F&G. I got a chance to meet him while in Miami, Florida, and was going over with some of the products, and as I was talking to different carriers. Well, after I left there, my team and I wrote about 5 F&G policies over the next 2 weeks. And I was very impressed with the customer service side of it. I would call and they would set up illustrations for me, and they would let me tweak it a little bit until we got it just the way we wanted it. And being fairly new to F&G or to IULs in general, I think it's pretty important that we had that relationship, and I was really impressed with them. So anyway, with no further ado, I want to pass it off to Tom, and just this is going to be a training for dummies on IUL. So whatever you can give us, a bunch of us are brand new to the process, and just kind of share with us the F&G side of it. All right, Tom.
Well, I appreciate the time, Darren and Albert. So I'm your national account manager with F&G, Tom Edgington. So as a national account manager, I do a lot of calls like this to talk about the F&G product story, why F&G, what makes us unique from a product standpoint, but also just as important, and Darren was talking about that, is your experience as an agent writing business with F&G. We firmly believe there's a lot of investment and dedication to make that one of the best experiences in the industry. And I'll highlight some of those things that are taking place today. So when you think of F&G, think of really kind of the best IUL out there. What makes F&G unique is our index offerings within our IUL. And IUL is a great solution for your clients with that upside protection, or upside potential, and downside protection. And then the other big thing is going to be that experience. You know, F&G has an exam-free underwriting program. So ages 0 through 60 up to $1 million. We underwrite your clients without an exam. So that's important. It makes it less invasive. You don't have to pee in a cup or get poked with a needle for blood. But the big thing with that foundation is now a majority of cases from submittal to approval to issue, a majority of those cases are come in the door and they're out the door in 2 weeks or less. That's important for your client. They have a need. F&G has a solution. But even more important, this is your business, your livelihood. You need to get paid your commissions. So it definitely goes hand in hand. Those are my opening comments. What I'll do now is I'll go ahead and share my screen, and we'll do some formal, we'll get into the all things F&G. And let me know if you guys can see the screen. Yes. Awesome. So the power of partnership. Anytime I'm on a session or a meeting like this, F&G firmly believes it has to be a partnership to be successful. So I'm not going to get on here and talk about our products and then leave it up to you to go sell our products with no support. It's a partnership. We grow together. So if you have questions on our products or illustrations, underwriting, all of the above, please reach out to us because we want to hear from you and we want to help you. What makes F&G unique, and what I just discussed a little bit ago, is our IUL products. So F&G is an IUL and annuity carrier or product provider. I'm going to be your dedicated representative and support for IUL. And what makes our IUL so unique is our index options within our IUL products. So in a little bit, I'll go through those index offerings, but from a high level, what you see, in IUL, the value prop is high upside potential and downside protection. So when you think of, if your client has money in the stock market, similar upside potential to the stock market, but the big thing is that downside protection. So think of your 401k last year, or I think of mine. I don't know why I'm thinking about this because it's pretty brutal, where my 401k was down 30% last year. But when your client's in an IUL, or my IUL policy, I never lost monies because I have that downside protection. And with F&G IUL, whether it's the S&P, so the S&P is a typical index that you're going to see in most IUL products, our cap on the S&P is 12%. You don't see that high of a number at other carriers. The unique thing, if someone else has a number that high, the next thing that comes behind that is a spreader fee. With F&G, there's no spreader fee associated with that. So higher upside potential, and you have that downside protection. The index offerings within F&G's IUL is what's driving the success and what's creating all of the buzz about F&G. Dedicated staff, we're based out of Des Moines, Iowa. I'm based out of Des Moines, Iowa. What's unique is we're a Midwest company, Midwest love. So myself and my internal wholesaler, we're dedicated to you. What's unique about F&G is we actually open our doors and our phone lines. If you want to talk to an underwriter, you can absolutely do that. And a lot of companies limit your interaction with underwriting. So let's say you have a client that maybe has some medical history and you want to talk to an underwriter to see if we can offer coverage, you can do that. And we encourage you to do that. The big engine behind F&G's success and why this is a great solution for your client is our proprietary and diversity indices or indexes. So we're an IUL company. Within an IUL product, you're going to have different indices. So something that's exclusive to F&G is our Barclays Trailblazer Sectors 5 index. No one else has it. It's exclusive to F&G. And you guys have some exclusive offerings within that Barclays index. And I don't want to ruin that. And I'll show you what that means here in a second. But then you also have the S&P with that 12.5% or 12% cap. So markets change. When markets change, indexes perform differently. So having different indexes is invaluable for your clients to make sure that their policy is performing how we want it to. Product's important, but adapt quickly to a changing landscape. Consumers or clients expect this to be a quick turnaround. So F&G is in a really good spot with our exam-free underwriting. And I'll show you the parameters of that here in a second. But the whole focus of exam-free is making the life insurance process, the underwriting process, quick and easy. Your client has a need, F&G has that solution. We want to make sure it's quick and easy, get that policy out the door, and make sure you're getting paid your commissions. And the big investment, what's going on behind the scenes in the home office is getting better, a commitment to excellence. So we're pretty good where we're at today, but we're not happy with that. And what you will see in the future is how do we get that to a week max turnaround time or instant approval, where no matter if your client's preferred, standard, table 2, they could get instantly approved and they have a product that's offers strong performance. That would be something that's very unique for you from an agent standpoint, because typically with other carriers, if you see instant approval, there's a pretty big performance give up with that instant approval opportunity. What we're looking to do is offer instant approval, but still offer the same performance potential as if it was fully underwritten. So that'll be something that's truly unique, and that will play out over this year. So who is F&G? F&G is a top 10 IUL company. So without the partnership of FFL, and this goes back to the power of partnership, we won't be able to talk about these numbers here. So we're very proud that we're now a top 10 IUL company. If you looked at the last 4 years, F&G was #1 in IUL sales growth in the industry. But now the new story, when your customers ask, well, who is this F&G company that or solution that you're offering? They're a top 10 IUL company and climbing. So some companies that would be ahead of us would be like an Allianz or a North American, really the bigger IUL companies, and that's where F&G plays. The really cool thing about this slide is the green number, and that talks about the power of our products. So whether it's death protection that your client's seeking, living benefits, which our products have, or using life insurance as a retirement vehicle or college funding, we issued over 70,000 policies last year. So that's 70,000 clients that got a solution based on their needs. So it's not 1 or 2 or 10 big sales that you might see at other IUL companies. We're covering a wide range of individuals, and that really speaks to the power of our product. So really to highlight and walk through what exam-free means. So I talked about our exam-free underwriting program. So if you have clients ages 0 through 60, we go up to $1 million. So if they fall within those parameters, now we're not using an exam to underwrite your client. It makes it a better experience. And the big thing about that program is then 90% of the clients or majority of clients are getting issued at our top 2 classes, standard or preferred, which are very competitive ratings, very strong performing policies, and it's 7 days or less. So 2 weeks or less from app submittal, approval, policy issuance, it's taken 2 weeks or less. So that's a really good foundation and platform to make this whole process of getting life insurance easy for your client. And if you compare that to other carriers, you know, why this is such a big deal is with other companies, you're probably talking months and not weeks, where it might take a month is a quick turnaround or a couple months and they require an exam. With F&G, it's a very quick process, and that's what we're focused on. Doesn't mean that every case is going to fall within that 2-week process, but remember, a majority of cases are falling within that 2-week process. If there are cases outside of that where we have to get an exam, it still is a pretty quick process, where we have a high efficiency machine where when we order the exam, then our underwriter approves it. So typically when we have underwriting requirements, our underwriters are reviewing those within 2 to 3 business days. So it's a quick process. So that's the foundation of making this whole process easy, which is a big deal. Now, when we get to talk about F&G IUL products, you know, this number down here is the product that you have today, Pass Setter with Barclays. It's the #1 illustrated IUL product in the industry. So that's a big deal. It's a good marketing tool for you. You know, the illustration isn't the end all be all though. It's a glimpse of the future. It kind of gives you a glimpse of the performance potential of an IUL product. But remember, that's not a guarantee. So when you see numbers on an illustration, doesn't automatically mean that's going to happen. The numbers could be higher or they could be lower. But when you have those strong indexes with F&G, you know, that's something that we want to reinforce, because sometimes agents believe that the illustration is the end all be all. We have great illustrations, but the most important thing from an F&G standpoint is we have great products that are designed in the best interest of the client. So both of our products, whether it's Pass Setter or Everlast, you know, Pass Setter is designed for your pure accumulation sales, utilizing life insurance as a retirement vehicle or college funding. That's when you would focus on Pass Setter. And then the other product that I'll talk about later is Everlast. It's more of your death benefit, living benefit focused, but it still has strong accumulation. So when we look at these accumulation sales, we're building up policy values, then we're using those policy values for retirement or college funding. So one thing that's unique, contractual guarantee that our variable loan rate will never go above 5%. That's a huge deal. If you looked at the variable loan rate last year, it was around 3%. And with carriers or product providers, their variable loan rate is always going to be pretty similar because it's typically based off the Moody's corporate bond rates. So last year it was around 3%. Now it's above 5%. So if your client's taking monies out of a policy with F&G, we're never going to go above that 5%. Whereas other carriers, when you look at their guaranteed variable loan rate, it's probably closer to 7, 8, or 9%. So that's something that's in the contract. It's a big deal. You have strong indexes. So we want to drive the performance of the product, but also just as important, when you're taking monies out, how much are you getting charged on that loan within the policy? The index options that we offer here on the S&P, it's a 12.5% cap, and that is going to change here in March. It'll be a 12% cap. It's still a great story. That's one of the highest caps, if not the highest cap within the S&P. No spread or fee associated with it. And then with that Barclays, it's exclusive to F&G. There's no cap on that index. So unlimited upside potential, no spread or fee associated with that. You have a 1% bonus. And I'll talk a little bit more how that 1% bonus works, and 145% participation. So let's say that the Barclays performance returned around 10%. With that 145% participation, now what's going to happen is my policy is going to get credited at 14.5, and then I take the 1% bonus, so I'm getting credited at 15.5%. So 145% participation, it's actually, you're getting more than what the index is returning. So accumulation is important, but just as important is that living benefit story. Critical, chronic, and terminal illness, those riders are offered within the Path Setter product. One of the unique things about Path Setter is it's available at all ages. So Path Setter is available from ages 0 through 80. So if you have a client that's 3 weeks old all the way up to age 80, you can look at a Path Setter product for them. So I talked about it, Path Setter being the #1 illustrated product when you're utilizing the Barclays index. This is proof of that. This is showing the top IUL companies out there. Max distribution sale. You can see that F&G is at the top. So proof is in the pudding. A picture says 1,000 words. That's what this is validating here. You know, there's going to be some changes when it comes to IUL illustrations. I don't know how much you're familiar with that, or if you've heard of AG 49B. And AG 49B is an industry regulation on what carriers can illustrate within an IUL. So that's going to change how companies, what they can illustrate, if they can illustrate bonuses. So on these bonuses today, you might not see the performance that you're looking at with an illustration. But what I would say is F&G, we probably are one of the few companies that are set up really well for this new regulation that's going to take place, whether it's our S&P or these indexes that you're seeing. And we'll go through that. We'll set up other calls once AG 49B happens, but it is going to change the landscape of how IUL companies illustrate products. But F&G could not be in a better spot with that. I think the reason that is, the best thing about F&G IUL, you know, I can talk about our index options from a client and agent standpoint, very easy to understand products. What you see is what you get. So when we talk about these indexes with Barclays, you know, an unlimited cap, no cap, 145% participation, a lot of times when you're throwing out numbers like that, then there's going to be a spread or fee on the back end, which can make things confusing for the agent or the client to explain. Or having the S&P with a 12% cap, there's no spread or fee associated with that. What you see is what you get. Not a lot of moving parts within the product, which is great because it's easy to understand. So these are the index options. So the S&P is a big one. You have a couple different options. The one that's used most often is the S&P 500. It's a 1-year point to point. So right now it's a 12.5% cap, and that will go down to 12% here in March. But it's still a good story because that's one of the highest caps out there in the industry. So high upside potential, strong crediting potential for your clients. The Barclays is the one, again, that's unique to F&G, exclusive to us, where you have no cap, no spread or fee, and this is showing what the illustrator rates would be. On this slide, what I want to show and explain is what that 1% bonus does on the Path Setter with Barclays. So let's say that, you know, starting in year 2, that's when that 1% bonus happens, and it's guaranteed to be at least 1%. So with some bonuses, you know, we're illustrating at 1%, but maybe that's not guaranteed. With F&G, that 1% is guaranteed. It helps you on the upside, but it also helps you on the downside. And the downside is kind of what market environment we're in today. So let's say that you saw a negative return on the Barclays index. With our indexes, our floor is 0.25, but now with Barclays, your floor in essence is 1.25. So if you get a negative return on Barclays, your downside protection is 1.25 within that Barclays index. And the way that that works is that 1% bonus isn't actually tied to the performance of Barclays, it's tied to our fixed account. And our current fixed rates are 4.75. As long as that current rate is above our guaranteed rate, which is 0.25, then you get that 1% bonus starting in year 2. So it's not guaranteed, but in my mind, it is guaranteed, because I can't see an environment where our current rate is going to go below 0.25. So as long as the current rate is above the guaranteed rate, you're getting that 1% bonus in year 2. It's not tied again to the performance of Barclays. So even if you have a negative return on Barclays, you're still getting that 1% bonus, meaning that you have a 1%, 1.25% floor on the Barclays offering. If the Barclays has a positive performance, you're still getting the 1% bonus. So it can help you on the upside, but it also helps you on the downside if the index is performing negatively. Does that help? I'm going to stop to see if anyone has any questions. That makes sense?
It does. And Tom, on the few that I've written so far, we've went half S&P 500 and then the other half Barclays, kind of give it a safe. And I think that was kind of recommended, and I like the clients like that aspect of it.
Yeah, that's a great point, Darren. And that's what I would suggest. I would say 90% of the clients with F&G, they diversify. So 50-50 split between the S&P and the Barclays index. Barclays is a volatility controlled index. So sometimes you won't see the upside swings that you're seeing with an S&P that's a growth index. But when the S&P is down, then you might see some stronger performance with Barclays. And the whole point there is when markets change, indexes perform differently. So I want to have exposure to both, or diversify to have allocation to each index. So I think that's a wise way to go, and a smart way to go for suggesting what indexes or how much to allocate to each index.
And during the illustration process, it's really a real simple process of picking those two out and identifying those two. And I thought it was anyway, the illustration part of it. So.
Yeah, because once you scroll, like you'll see when you get in the illustration software, there's a solve force tab, which is kind of your home base within the illustration. And I'll get you guys a link so you can look at some illustration tutorials. We'll go through that here in a little bit. But then once you scroll down, you just input what allocation you want to the index. So that part is pretty easy.
Very good.
So that's Path Setter. F&G, on the theme of trying to make it easy for you, we have 2 IUL products. Path Setter is your accumulation focused product, not so much focused on what the death benefit is or living benefits, really focused on that internal accumulation potential. So whether it's using life insurance as a retirement plan or college funding, Path Setter is the solution that you would want to use for that. The second product is Everlast. It's more of a death benefit, living benefit focused product. So for older age clients, maybe ages 55 and above, where we want to have some death benefit out to age 100, I want to pay the least amount of premium, but I also like the living benefit story. That's when you would want to look at Everlast. One thing that's unique with Everlast that you don't get with Path Setter is a 2-year rolling target. So as an agent marketing and selling F&G products, commissions is important to you. With Path Setter, typically you're overfunding that. So it's above target premium. So you're getting paid your full commissions in the first year. With Everlast, since it's a death benefit, living benefit focused product, typically your premium that the client's paying is below target. So we have a 2-year rolling target, and that just means that you have 2 years to capture the full target premium, which is what your commissions are based off of. So it's a 2-year window. So let's say that my target premium is $5,000 and my client's paying $2,500 a year. They go in and pay that $2,500 year 1, you're going to get paid commissions on that. Then in year 2 with Everlast, they pay the 2nd year premium. You're still getting paid 1st year commissions instead of renewals. So that's a big deal. Similar index options that you would see with Path Setter, you have the S&P and the Barclays. On the S&P, it's going to be a 10% cap on the S&P. And then on Barclays, it's still similar, to what you would see with Pass Setter. And just like Pass Setter, both products have the critical, chronic, and terminal illness riders. So living benefits. So your clients can actually access the death benefit prior to death. And we'll go through that more here in a second. Or actually right now. So within each product, critical, chronic, and terminal illness. So the first living benefit rider is a critical illness rider. So these conditions listed, 98% of critical claims are stroke, cancer, or heart attack. So if your client has one of those conditions, now they can actually access the death benefit to help them. So it's a living benefit rider, but not to be too cliche, but it really helps the client to keep living. So think if I have cancer, my medical bills could be very expensive, but life doesn't stop. So my kids still need fed, my mortgage doesn't stop. There's just a lot of things, even though I'm sick, I still got to pay the bills. So being able to access your life insurance policy and death benefit to get a benefit like that to help pay those costs and bills and focus on getting better, that's a huge deal. So that's what the critical illness rider is. It's going to be, the calculation is based on your age and severity of the condition. So at time of age and severity, then it goes into a actuarial table. And then based on that, that's what the payout is to the client. So it's not a hard, fast rule that you get 25% of your death benefit like chronic illness or around 90% on the terminal illness. It's really based on age and severity for critical illness. On the terminal illness, if you have life expectancy of less than 2 years, in most states, in Florida, it's less than 12 months. So if your client unfortunately falls within that, then they can access their death benefit again. And typically it's going to be close to 90% of the death benefit. So I had a client, an agent that had a client, unfortunately, she was terminally ill. She had a death benefit around $300,000 and she got a check for $287,000.
Okay.
And that meant the world to her because she had a 14-year-old son. So she had the time to use those funds to make sure that he was taken care of and all the planning that she wanted before the inevitable happened. That meant the world to her and something that I'll never forget because, what you guys do is important. Having riders on policies like this, when life happens, this is how you change people's lives. And that definitely helped her and put her at ease to get those funds early to make sure that her son was taken care of. And then the other big one is the chronic illness rider. So 2 activities of daily living. If your clients can't perform those 2 activities, then they can pull 25% of the death benefit each year. To have these riders on a policy, as long as your client's table 4 or better, the riders are automatically included in both products, whether it's Pass Setter or Everlast. So table 4 or better, you would automatically see these riders. The only other qualifying condition is going to be based on the state. So your clients typically need to be ages 75 or 70 and under. So as long as they're 70 and under, table 4 or better, you would see these riders included in the policy. And it is now, shout out to LA, the chronic illness rider is now available in California.
Tom, kind of explain a little bit while you're on the tables about how that breakdown is established.
Like on the critical?
Yeah, well, yeah, table 1, 2, 3, 4. You said 5 or higher.
Oh, okay. Yeah. Yep.
For
I think so like we don't have a table 1, but we have a table 2. So really what that means, it's a 50% more cost than what your standard rating would be.
Right.
Or if you have a table 3, now it's going to be additional higher cost than what your standard rating is. So it's like at 125%, 150%, 175%. That's what you're looking at when we talk about table ratings.
Yep. And so to be a table 5, it's pretty, the health conditions are pretty low, right? In order to.
Yeah. I mean, it might be someone that has pretty significant cancer history, but we've had a long enough time where we can offer coverage.
Okay.
From a table 4 or under, you could still have clients that have coronary artery disease. and
Okay.
still could be table 4 or better. Or
Nice.
you could have clients that are diabetic and they very easily could still be standard table 2 or table 4. So there's still a lot of clients that have medical conditions or medical history that would fall within that table 4 or better.
And that's important, Tom. I'm telling you, there's so many times these clients have been turned down, or from being able to get insurance at all, and they're willing to pay whatever they can just to have coverage at this point, and to know that somebody might offer them. So when I get off this call today, I actually got somebody in mind. I'm going to call and let them know there might be an option for us.
Yeah, and then you can always reach out to me if you
Yeah.
have the medical history or any details, and I'm happy to talk with underwriting, or I can tell you if we can potentially offer coverage. I think that's a good way to go if you have clients with medical history, to always reach out to us. We're happy to go through our guidelines, look at that with an underwriter, and let you know if that's something that we can offer coverage on.
Love it. Thank you, Tom.
Yep. But I think the big thing there is, table 4 or better, table 4, that doesn't mean that like a client that has diabetes history or is a diabetic, coronary artery disease. There's a lot of clients that even with medical history are going to fall within that table 4 or better. So with these living benefits, those 3 living benefit riders are included in the policy. If you activate one, the other 2 would go away, is something to keep in mind. But one of the unique things about our riders is there's no elimination period. So sometimes if you want to activate a rider, there's elimination period before you can get the benefit. We have no elimination period. And as I was talking about a second ago, as long as you're table 4 or better on the critic and chronic illness riders, those riders are automatically included in your policy. Competitive payouts, very similar payouts, if not a little bit better than what you would see with other product providers, where 25% on the chronic illness, 25% of the death benefit each year. On the terminal illness, it's 100% access. There is going to be a discount. So it's around 90% of the death benefit that the client would get. And that the big thing with chronic is it's an indemnity rider. So what that indemnity means is if your client qualifies, gets certified as chronically ill, now we're sending them a check and they don't have to send in transactions or receipts. They get the check, they use the money as they see fit. So from a dedicated support standpoint, I'm your national account manager. I always want you guys to reach out to me. I do travel a lot and we have a lot of great resources. The main one here is Amy Bruce. So, I want to make sure this isn't in your way. So this is an 800 number that's really dedicated to you guys at FFL. If you call this 800 number, it's going to go to Amy first. If she's not available, then we have other great senior internals or internals that can help you with product questions, illustrations, really anything from an IUL standpoint, the sales desk can help you. But I would strongly encourage to call this number, or if it's something that you want to escalate, you can absolutely reach out to Amy. Then the other thing here that's going to be really helpful for you, and it really encompasses all things F&G from an IUL standpoint. This is our microsite, success.fglife.com/life-agent. So out there, it's going to be all of our product material, all of our marketing material, sales concepts, illustration tutorials, e-app tutorials. So there's a wealth of knowledge out there, and strongly encourage you to visit that microsite. The best thing, it's a microsite, so it's not login password protected. So you type in that web address, it's going to pop up, and there's a wealth of information out there. So this gets back to the why F&G. Strong product performance. What sets F&G IUL apart is the index offerings within our IUL. So having that 12% cap on the S&P, or the unique Barclays, it's exclusive to F&G, where you don't have a cap, 145% participation, and a 1% bonus. It's one of the strongest, if not the strongest, illustrated product out there. Illustration's great, but the most important thing is it's a strong product for the client and for you as the agent. And the best thing about F&G products, easy to understand. Our indexes are easy. Our IUL product is easy to understand. Less moving parts. It's easier to explain. We want to grow those monies, but just as important as growing the monies is what are we charging when you're taking monies out of the policy, and you have that 5% cap contractual guarantee that if you take a variable loan rate, it'll never exceed 5%. This is the new way of life insurance. So yes, it's life insurance. You have death protection, but you have really unique that internal tax treatment of a life insurance policy, tax deferred growth, tax-free income, as long as you have a death benefit in force. So you can utilize life insurance as a retirement vehicle with the index offering similar upside potential, high upside potential, downside protection. But the third thing here that's fairly new within the insurance industry are these living benefits. And both products with F&G, the Pathsetter and Everlast, offer that critic, chronic, and terminal illness rider. Product is important, but how do we make this a quick and easy process? Can't hammer that home enough. And I think that's really a differentiator with F&G. Our exam-free underwriting program, so your clients, typically a majority of your clients don't have to get an exam, but the whole premise of this program is making the life insurance underwriting process quick and easy or transactional. So this is highlighting a lot of the things that were on that previous slide. What I like to do at this point is I'm gonna stop sharing and just open it up to any comments that you guys have. Anything is fair game, and anything from like a product standpoint, new business, underwriting, all of the above. If you have questions, absolutely ask. I'm happy to help.
So one of my agents had asked me to kind of have you go over how the death benefits compared to the cash value works, you know, within an IUL product. So let's say 10 years from now, you cash value and they want to pull from the cash value. How does that affect, you know, the insurance side of it?
That's a great question. I think I'm gonna pull up my software here. And we could spend an hour on that and show you what that does. So typically, you know, we're going to grow monies within the policy, and then we're going to take monies out. Bear with me.
Sure.
Can you guys see the agent site?
Yes.
Awesome. So when you get contracted with F&G through FFL, then you get access to Sales Link. That's our agent portal. So once you go out here, you're going to see, you can look at all your cases that you've submitted, new business, commissions. But the thing out here that I want to talk about is the illustration software. So you would click on that. I'm just going to do a quick case here. We can use Maryland. You know, one thing when you talk about a life insurance, the longer we wait to take monies out, the better. So ideally, the earliest we're going to take monies out is wait at least 10 years. It's not designed to put monies in, pay premium, and then take a loan. You can do it, but you're just putting a lot of stress on the policy. So that's kind of a be your own banker concept. Yes, we can do that, but the more you're taking out or the earlier you're taking out, you're putting so much stress on the policy that is that in the best interest of the client is what I would say.
Okay.
So Albert, within our illustration software, when I was talking about our solve for tab, so a lot of moving parts here, but once you get used to this, so our solve for tab, excuse me. So if I select max accumulative income, a majority of the inputs, just a couple inputs, and then I'm good to go to run the illustration. So here I'm going to solve for the face amount. So what is the unknown that I have? I either know my premium or I know the death benefit the client wants. Here I know my premium, so I'm going to solve for the lowest possible face amount to maximize my growth potential within the policy. I'm going to do $500 a month. Apologies, I'm going to move you guys, my screen's in the way. So I click OK. If I'm not going to pay premiums for life. So here what I'm going to do is I'm going to do age 50. So if I want to stop premiums or do a short pay, it's a universal life contract. So you can dictate and the client has full control on how long they pay premiums. The other input I'm going to do is when I want to take monies out. So I'm going to do at age 50, I'm going to pull income for 20 years.
Okay.
From there, I'm 80% done with the illustration. The only other thing I would change is my death benefit option. So typically, if it's a max funding scenario, I typically start with an increasing death benefit switching to level. So when you do that, you're starting at a lower face amount. You're minimizing the charges associated with that lower death benefit to maximize your growth potential. And then when you take monies out, you switch it to a level death benefit. So I would change that. That's the one thing that you would change outside of the solve for tab. And then the second one is your index options. So we'll do a 50-50 split here. And then we're good to go. So let's pull up this illustration. And that'll show you what happens, when you build up monies. Got an error there, it should. So here we're paying that $500 a month. We're paying it out to age 50, and then we're taking loans or income from the policy. So when you can see, once you start taking loans from the policy, the death benefit is actually the collateral as for the loan. So you'll see your death benefit starts to come down. Is that helping, Darren?
Yes. So.
And I could spend a whole half hour or hour, Amy and I could, maybe that's a second session that we could set up where we can go through the illustration software, run some examples like a life insurance as retirement, college funding, and then maybe a death benefit focused solution, what those illustrations look like. Mm-hmm. But one of the cool things here, so your client has put in $90,000 and they've taken out $270,000 tax-free. So that's the big thing about life insurance that people aren't aware of is the internal tax treatment. So tax deferred growth, tax-free income, as long as there's some sort of death benefit in force. So for those new to life insurance, that is definitely a big selling point. The monies that you put in, because in any other vehicle, when you take monies out like this, you're going to get taxed on it. Whereas with life insurance, tax deferred growth, tax-free income, the kicker there is some sort of death benefit in force.
I have a question.
Yeah.
So obviously, like you said, when you start taking loans from the policy, it negates from the death benefit. It looks like the account value would be the cash value, right? That's still growing on that end. Is that what that column is?
Yeah, great question. So the account value is still growing, and based on the index performance,
of course,
your full account value. So it's a participating loan. So you're actually getting credit still on the full account value. Your surrender value is what the client has access to.
If they surrender the policy, of course.
Yes. Yep.
Yeah, but they can borrow from account value.
They can borrow from the surrender value.
Okay, got you.
Because
and then
it's looking a little bit different. Let me go up to the second page here, because prior to taking the loans, you can see that our
Oh, got you.
are very similar, are almost the same, but then once you start taking the loan, then it's going to come down. But the account value is what you're getting credited on based on index performance. So it's participating. So we're still giving you, even though you have a loan, we're still crediting you on the full account value.
I understand. And you said that if you take premiums early, like for the infinite banking, which is very popular, of course, right, would obviously stress out the life insurance. Would it not be as stressful if if people wanted to do a what is it called, like a lump sum, like a front loading it like in the beginning, right, and being able to use that and still paying a big premium?
Yes and no, and probably more so no, because once you do a lump sum premium, now the death benefit is going to be higher because you're
Higher.
doing a single premium. So then that, with that death benefit being higher, then it's higher charges. I just get pretty apprehensive, and when clients want to put monies in to a policy and then take an immediate loan or take a loan in year 2, you can do it and we can illustrate that. But in reality, if you're not getting this 6.89 each year, or you have a bad year in the policy, that's going to put so much stress on the policy in the earlier years that is that in the best interest of the client. So when you have situations like that, if you have clients like that, always reach out to me. I'm happy to walk through that. I mean, ideally, we're at least waiting for like 5 years or 10 years to set up an ideal solution, make sure it's in the best interest for the client. So that there's just a lot of things. And this is definitely a concept that's widely marketed, be your own banker. So, but I don't encourage to put monies in and then take an immediate loan. Some other times you'll hear like, take the equity out of your house, put that into a policy and then take an immediate loan. Don't encourage that, nor do we allow that. So just things like that, if we do it the right way, it's the right fit for the client, instead of putting monies in and trying to take it out. So hopefully that helps.
Thank you.
I've got a question as well, Tom and Amy, and thank you for your time this morning. Could you talk a little bit about what factors go into F&G changing the cap or participation rates on those indices, and what's been the history of those changes? Because I know some people will knock IULs and say, well, the guaranteed, participation rate is only this, so they could theoretically lower it down. What's kind of your history of those caps and participation rates?
Yeah, so that's a great question. And that's right, where, companies can change the caps on their index products. Really, the big driver of us changing that to a 12% is the new illustration regulation AG 49B that's going to be implemented May 1st. So it's coming down to 12%. But what's unique about that is the illustration rate is changing by 0.03%. So really similar, what you would see at 12.5% to 12%, it's going to be the same illustration. What's dictating that is AG 49B. And I'm trying to not get too deep into the weeds. It has, when you look at a cap of a company, it has to do with your option budget. So F&G's option budget, then we're buying options within the S&P based on that budget. Then we can offer certain caps, and that's what is different between based on that cap. Then we have an illustration rate. But when you look at F&G, the cap on our S&P has been above, like since 2012, it's been around 12%, 12.5%. It's gone up. Now it's at 12%. One of the unique things with F&G is our in-force block and our new business block share the same cap. So if the S&P is to go back up, even though your client has an in-force block, their upside potential also goes up. Does that help? Some companies differentiate, if you have an in-force policy, you have this cap. If you have a new policy, you get this cap. Whereas with F&G, and this is unique, our in-force block and our new business block share the same cap.
Interesting. So let's say I started a policy with F&G last year when it was 12.5%. if my interest hits its 1 year point to point, the cap is now 12%. That means on the S&P strategy, the cap would be 12%, not 12.5.
Once you get into the new segment. So within an IUL, it's a 1 year segment. So when
Gotcha.
the next time you start a segment, then your cap is 12%.
Gotcha. All right. Thank you.
But then if our cap goes back up to 13 and a half, then once you start that new segment, now your upside potential also went up.
Very cool. Thank you.
So
I got a question. I'd like to expand on the question I had on the chat with Amy. Because from Sean Ruggiero from FFLAMS, he mentioned before how like the IUL based on the accumulation, it's okay to use it for college funding, but it doesn't build enough. So how would you build this, or like my suggestion of meeting new parents, you know, a 0-year-old brand new baby, on how much and what's a comfortable premium to build up for, to where it's going to be a nominal amount for college funding.
Good question.
so I think with college funding, just having the right time horizon to build up those policies. So I'm going to use my daughter Piper as an example, 2-year-old, and I'm going to do max accum with income. And this is the exact policy or similar to what I have for her.
So you're starting income at 22?
Well, I can do a couple things here. So I want to show you this. I do have a hard stop here at noon or 11 my time, unfortunately. But Darren and I would love, Albert, I'd love to set up another session with you guys. Whatever you need, we can go through the illustration software. Just let me, or I can go through underwriting, doing business with F&G, whatever it is you guys want. I'm happy to do that. But here from a time horizon standpoint, so I have 20 years here. I put in 60,000 and I've taken out around 108,000.
Nice.
One of the other cool things about life insurance, and one of the thing that I want to show you here is, so now I've taken out 108,000 for Piper's college. So we still take out that 108,000, but then the monies can continue to grow. And based on performance of the policy, she could have an additional income stream at age 64 for retirement of almost 102,000. So it's not guaranteed that it's going to be that. It's going to be based on the performance of the policy. But getting a policy on a 2-year-old paying $250 a month, you know, we can get it where we pull monies out to pay for college or help with college, keep that policy going, and then you could see retirement income.
Nice.
Got it. I was just looking at it from a selling standpoint of how I preach it. So it looks like I would preach it more on like the post-bachelorate for like a master's degree or a PhD degree.
Yeah, you can pull it out at age 18. I mean, the big thing there is just that time horizon. I mean, ideally you have like 15, 20 years to grow policy values to get outside of the front end charges. If it's 5 years or 10 years, then it gets kind of challenging to make a compelling story, or even illustrate it where, you know, I'm putting in this much money, how much am I getting out? But if you have the right time horizon of 15 to 20 years, then it can become very compelling.
I'm just gonna, hi, this is Amy Bruce. I am Tom's counterpart. And just to kind of add to it, why we like to show at 22 versus the 4 years is because if we shoot for scholarships, if we shoot for the free education, we do everything like that. And then maybe we resort to student loans. Student loans don't start accruing interest until after the child graduates from college. So waiting to repay those student loans once they start accruing interest, and we have more opportunity for the policy to build itself up. And so we've got a bigger pool of money to pull from when we're repaying those student loans or a down payment on a house or whatever it is that they might need to use when they graduate. So not necessarily going to the undergraduate or the graduate programs and those advanced degrees, still sticking with just the graduate programs, the 4-year college, and then repaying as much of that debt as we can right there.
Good point, Amy.
Yeah. And Amy, if you want to, I apologize, guys. Darren, really appreciate the time. I do have to jump for a call here at 11. But I'll reach out. Would love to set up another session. Really look forward to working with you guys.
Tom, I appreciate it. Great.
Thank you, Tom.
Yep, my pleasure.
Thank you, guys. All right. So Albert, Tom's having to leave, but I think that he was very informative.
Great stuff.
Anyway, Albert, between me and you, if anyone has any questions, maybe Mike is on here. Mike is really, really good on IULs. We can close out with us. Anybody have any questions?
Well, let's do this too. I mean, I think that was a lot of good information. There's a lot of good reasons why we would use F&G over a lot of other IUL, companies. So why don't we take down a bunch of questions? We can set up another session. We can ask them directly to Tom and Amy. Yeah.
Very good.
And I'm still here too. So if you guys do have questions, I did not have the same hard stop that he does. So if you guys do have more questions, I won't be able to drive because I had to join on my phone. But I'm happy to answer any questions.
Nice. Thank you, Amy.
Anyone with any specific questions right now for Amy?
I have Amy, question. Go ahead.
I'll wait.
Go for it. Go for Jonathan.
Right. I was just wondering, because I noticed that it's recording. By any chance, could maybe I get a recording email to me just so I could just go over the basic information in the beginning?
Yeah, we'll share it.
Should I wait till next session? That's no problem.
We'll share it later, Jonathan.
Oh, okay.
Yep.
I just had a question about the what do you call it? The Everlast paying twice. Can you elaborate on that? So it's just as long as you sell it, you instead of overrides, we're still getting advances on the second year?
Right. So what it would do is if your client was paying under the target premium, normally with a PAP setter product, then you wouldn't get that full commission. But with the Everlast, if the client's paying under the target premium, you have the opportunity to kind of earn the rest of your premium in policy year 2 once they've hit that full target premium total. So if your target premium's $1,500, they're only paying $1,000 a year, you get credit based on the first $1,000 that they paid, and then the second year when they hit that remaining amount, then you get the full target.
So just up to target.
Right.
Got it.
Anybody else? Questions for Amy?
I have one question. I'm working on a case right now, but I have to ask an underwriting question. What would be my direct line to F&G's underwriting?
Yeah, so you're actually going to use the 1-800 number that Tom provided for you guys to get a hold of me. And then we can get you transferred over to an underwriter so you can have that direct conversation with them.
Okay, awesome.
So I don't have I have an extension, but that's not going to do you any good, but I can get you over there.
Okay, thank you.
Yep.
Good. All right. Anybody else? Okay, Albert, why don't we try to maybe get together, you and I will talk and see if we can schedule a more in-depth illustration type of meeting. Won't have to be as long, but as long as we need to go. What do you guys think about that?
Yeah, sounds good.
All right, guys. Hey, we're going to close this meeting out. Appreciate all of you hopping on today, and this is going to be recorded and putting on the Elite and Rockstar's websites, and you guys hop on, share it. Hey, IUL is a great product. It's just one more tool that we have that's kind of goes unused. And I think once we learn it, I think one of the things about IUL is that personally is I was afraid of it, right? Because I just didn't know enough of it that I was afraid to really get involved. But I tell you, there are times it's beneficial to your clients to be able to offer it to them. I know that much. And so they're really looking for a product like this in many cases. So we need to get out of our way and quit being afraid to use it. Use it when you can and when it's necessary. Don't be afraid of it. Reach out to your upline, have them help you, and we'll work with you. But I know in this case, Amy and Tom and the team will help us as well. They've helped me every time. And so it's nice to have a really supportive carrier to work with. So, all
Yeah,
right.
I just want to say their sales desk is really helpful. So if you just have any questions, you can literally call up and say, hey, I have no idea what I'm doing. This is what I need. They'll walk through the whole process.
They did the same for us. And we didn't know, I knew just enough to be dangerous. And so that's kind of scary, but when we're dealing with other people's money, I want to make sure we do it right. And they were really supportive. They walked me through every step, and I know they'll do the same for you. So don't be afraid of it. Get out there and get help, get support, and it's a good product. So Albert, thank you guys. Appreciate the elite team being on here, and we'll close this out. Thank you guys.
All right, guys. Thanks, Amy.